In a business, let's say that you're in Doris's business, since you know about it, for 300 years she's been in it, and she was on it before they had phones. They used to have strings, you know? And smoke signals, and so that's how long she's been in her business. And you guys are the bankers, okay? Doris is going to try to acquire a business in not in her industry, in your newfound industry, SEO, okay? Okay, which he knows something about because of the internet. And you got a business, and they're going to be a little skeptical because you got 35 years of experience in one business, and you want to take that knowledge of management into another business. But it's close by. Let's say it's in Orlando. You don't have to commute. You've looked at the numbers look right. And you're here, and one of the things you learn about financial, are we running? One of the things we learn about financial presentations is you're interviewing the bankers. The bankers aren't interviewing you. So you have already gone through, you've sent them your package. It has executive summary, 1 page. You've sent them the resumes of your dream team. You've got 5 people on the dream team, 1 financial, 1 accounting, 1 acquisition guy. You can use me, I'm the chairman. You've got 1 generalist, a lawyer, and that have experience in that industry that you're trying to get into new. And it's a distressed sale. The guy's going through a divorce. The truth, you know, when I used to look for acquisitions, I went to, this sounds crappy, but somebody dying from cancer, got emphysema, sick, because those are easy deals that are made more easily because there's a sense of urgency because somebody's dying. Or there's a divorce. The guy that you're buying from is going through a divorce. So you've already called up, you've made an appointment, these are the decision makers. They're the guys that finance internet scum deals, and that you've asked them already, are they in the lending mode? They've said yes. Do you like the internet? And of course, Instagram and Zuckerberg, everybody's hot for it now. And that in this particular case, the company is 5 years old and it's cash flow positive. And you want to buy it and add your management expertise to make it grow just like you've done your existing business. And these guys have already seen all this information, and you've lined up an appointment, and you've asked them to bring decision makers, of which they are. They can make a decision.
And we are lending on cash flow.
Yeah, correct.
Dan, I've never gotten money out of a bank before.
Okay, well, that's where you're going to practice. Don't worry about it.
I mean, I've always
doesn't matter.
been
Bring it
able
to
to
us.
Yeah. She always buys cash. Okay. It's all right. It's all
No,
right.
I brought angel investors, and just this year I raised quite a few $1,000s, but then I told them I didn't want their money. I just moved.
Okay, well, fine. Well, that's not what you're going to be telling them.
Yeah, but I've never gotten it from a bank before because you bring everything in. I can't get money from the bank.
Okay, well, this is a new business, so this is why we're going to practice.
All right.
Okay?
It's a startup.
Yeah. Well, no,
it's an acquisition. It's a 5-year-old business.
It's a 5-year-old business.
All right, well, let me give it a try.
Okay, so introduce yourselves and let's go.
Doris Promisario, and
Benoit Brookins.
And as you know, over the past 26 years, we have a company, all the financials are in front of you, with answering service industry. We're the largest in Central Florida, top 10% in our country. One of the first to take it halfway around the world. You can see our bottom lines here. We have a good success rate here. We've just opened search engine optimization and management, SEOM company. And it's in its startup phase, and we need $100 million to get it off the ground, and this is what we need it for.
What we're doing is financing an acquisition. It's not a complete startup. What we're doing is looking to exponentially grow our business and reduce some of the risk on the bank by purchasing business with already existing strong cash flows. As you can see, the balance sheet is strong, not much debt, and we're positioned. Our management team is positioned to make this grow to a significantly larger company.
Okay, so you brought an expert on SEO. You have everything clear.
Yes, I'm an expert on SEO.
Okay.
I've sold companies to publicly traded ones, and I've worked in the space for many years.
For me, it's more interesting. You need 100 million. For what exactly do you need it altogether? What do you expect? When will we get back the money? And how should it run, the whole business?
We're expecting to finance partially out of our existing cash flows, and we are looking for the bank to put in some equity.
So, maybe I have passed it, but I cannot see it on the sheet of paper. How high is your cash flow?
You've done this all?
Right, well, wouldn't we have brought all that to the bank at this point?
Yeah, you're cash flowing $1 million a month.
Okay.
Okay, $1 million a month, and you need 100 million, which means 100 times more. What do you think, or what is your guess or your estimate? How can you increase your cash flow? On which level? With this 100
Well, the
million?
cash flow is
Yeah.
going to be automatically increased with the purchase that we're doing. You know, we've got a stream of income,
Yeah,
as you can see on the financials,
Which is
from the acquisition we're doing.
which is about 5 times greater per month. They gross about $5 million a month.
After the acquisition. So we talk altogether 6 million cash flow?
6 million cash flow.
Okay.
And we would like to take it mostly in the form of cash flow financing, maybe some equity participation from
What?
their bank.
Of how many? The return of on the loan, which period of time?
About a 5-year, 6-year term.
Just as an aside, a $6 million cash flow is what you said.
Per month.
Per month. That's 72 million cash flow a year.
Yeah.
They ought to get down and lick your ass. They ought to lick your ass.
I would say right now, if that's true, you can prove it, I'm going to sign it.
Yeah.
No problem with that.
Yeah, I mean,
Don't you need 200 million?
that's a done deal. And that's what they would say. Don't you need 200 million? Don't you?
I guess we have 500 for you.
Yeah.
So what kind of scenario should we run with?
Okay, now, well, I mean, if you have that kind of positive cash flow, what they're looking for in debt repayment, normally, depending on the strength of the business, and internet businesses are considered at the weak end of the continuum, not the strong end of the continuum, they want 1.1 to 1.5 times free cash flow. So in other words, they want you to be able to repay on a monthly basis 1.1 to 1.5. In the internet business, let's just make it simple, they want 2 times cash flow. So if you've got 6 million a month and free cash flow, that means 3 million, they would give you 3 million a month, which would only mean 3 million times 12 is 30. You'd pay back the 100 million in less than 3 years, which is a dynamite fucking deal. I mean, and even a Austrian doofus banker or a Romanian banker or could figure this out. I mean, it doesn't take rocket science to do. And there are deals like that. But what they will say, and to not steal their thunder, what they will say is how much of the free cash flow is contractual. Okay? And in the SEO business, not too much of it is. Okay? And they will normally look at, they like to see contracts 1 year plus, which doesn't exist too much in SEO business. So then they come down to 1 month. And so they say, okay, but even at that, if you can show them a track record of 12 months getting 6 million a month, with verified numbers, preferably audited, not bank statements, because bank statements can be forged, especially on the internet. You can copy and paste all kinds of crap. And, you know, it would be an easy loan. The questions that they would ask you is, well, you've been doing this 25 years, Doris, 25 years, and you've been doing this 25 months or 20 months or 15 months, whatever the time frame is. How can you transpose that work experience where you've been very successful in the other business? We understand that you pay for things cash, you know. But on the other hand, they'll say she paid for things cash, so she didn't build up her track record. Okay? And then when they try to give her money, she gave it back. Okay? And so they won't take that as a positive, they'll take that as a negative. They'll take that as a negative because you haven't dealt with shareholders, you haven't dealt with banks in that way. You haven't had the pressure of having to respond or with your feet to the fire. But a $6 million cash flow a month deal is a piece of cake. But they'll discount probably half of it. 50% haircut, as it's called. But even at that, you can pay, the debt service. And they'll probably they'll probably put it on a 5 or 7 year loan. They're not going to do it on a 3-year loan, which makes your numbers look better.
Okay, I think.
Yeah. Oh, they said okay.
I think I did.
Oh yeah.
So Dan, would they lend money based on?
On that scenario, yes.
Okay.
Even a doofus banker would lend money in that scenario. But the only question they would have
Is contracts.
is if it's contractual. And most SEO work isn't contractual. I mean, we outsource SEO, and what do you have, a month commitment or max?
A few months. Yeah.
Okay, maybe 6 months.
3 to 6 months.
But it's
Yeah.
still financeable pretty easily, right?
Yeah. And so, but the first role play is always the easiest because we want everybody to get comfortable with it, because the communication skills of getting used to talking to these people is really important if you're going to build a business, and if you're going to talk to ultimately VCs, and you're going to talk to equity guys and all this. It is. And now some of the banks may, depending on the size of the bank, may or may not be interested in an equity participation. They may or may not. If they want an equity participation, it's because they believe more in the deal. And that's what you want. Because you want them in the hole with you. If things go wrong, and you never know, you don't ever underestimate how wrong you can be. You want them in the hole with you. And I've been in the bank.
How much equity?
I mean, if a bank's in the hole $100 million, I mean, they're in the hole. They're married to you whether they like it or not, because you just can't walk away from $100 million loans, credits. You just can't.
And most banks, most VCs, they do follow-on rounds, so they keep like maybe a big chunk to invest capital in your deal.
Correct. That's correct. That's correct. And one of my mentees, the guy I told you about, Mayor Vargas, he's not a mayor anymore, the double Harvard degree guy, he manages $1 billion right now. And I knew him when he couldn't spell a billion. And a little kid from East LA, but now he's a very sophisticated, Harvard man, and his partner is a Stanford lawyer, MBA. Which they have, a lot of the big schools have MBA lawyer programs, and so they're very sophisticated, they're posh, Neither one of them know dick, but they're posh. They're in their early 40s, and and a quick story before I forget. He was an all-state baseball player, Fidel, and they dreamt about being in the finals of the state baseball finals in the state of California. Some great baseball players there. They got to the finals and they lost in the finals. And but they didn't dream about winning the finals. They only dreamt as a team for a year of getting to the finals, because the odds were against them getting to the finals. The next year they go back to the finals. Okay, they dreamt of winning the finals. It's very unlikely that you go back to the finals 2 years in a row, and they won the state finals the second time around. But it's what you dream about. They didn't visualize them winning. They only visualized because it would be a big honor for a little school like they came from to get to the finals. But once they got there, they said, shit. But all year, their coach had been drilling them about getting to the finals. You should be proud. And I don't like when people say, I'm proud of you just for being here. That's a load of shit. If you're not going to fucking win, why come? I'm not proud of you. You just get there. I'm proud of you if you win. Okay? And a lot of the, what's his name? Murray, who just won the U.S. Open, Scottish guy, not from right near here. He had been taught to get to the Grand Slam finals is a big privilege. And his new coach, Lendl, who has won 7 or 8 Grand Slams, He says, fuck getting to the finals. If you're going to get to the finals, you don't win, why go? And he won Wimbledon. He lost to Federer. It was a turning point for him, inspiration or desperation. He lost to Federer at Wimbledon. He won the Olympic gold for tennis, and then he won the U.S. Open. Okay, so that was his breakthrough. Because all his life, he's 24 years old or 25 years old, something like that, was to get to the Grand Slams. And he thought that if he got to enough Grand Slams, he'd finally win one. The new coach says, piss on this, get to the Grand. You're not hiring me for all this money here to get to the Grand Slams. You're hiring me to win the Grand Slams. And he got the confidence after winning the gold medal at the Olympics, and then he won the U.S. Open. So it's what you visualize, and I'm just talking about Fidel, who manages $1 billion. But back to this, you will, if you come prepared with the answers to their questions, and you haven't put them really on their back feet so far, so you haven't really interviewed, because the numbers that you presented are so positive, it'd be hard not to get it through and fuck it up. Yeah, fine.
Since the business model is SEO, wouldn't the bankers ask about the lifetime of this, and if they're not at the mercy of Google?
Well, no, of course. Well, I said about contract, contract, and real sophisticated lenders are going to talk about the changing of algorithms and all the things that Google does to fuck up your life. But when the numbers are so overwhelmingly, because the numbers are strong,
You don't care.
as they say in Texas, those numbers are strong as mule's breath. I mean, the numbers are so overwhelmingly strong. Now, if it's a marginal deal, I mean, but I mean, to pay back a loan like that in less than 3 years is, I won't say it's unheard of, but it's almost unheard of. So, I mean, it's very strong. So, and Marcus has seen enough bankers, he knows more or less the deal a banker will jump on. Yeah.
I have a question too about Doris paying primarily with cash. So I was thinking of a way to offset that, meaning if, for example, we can get our vendors to report our invoices as credit lines, basically. So I was wondering, what do you thought about using Dun & Bradstreet or something?
Oh,
like,
you mean factor?
Yeah,
Yeah.
Okay.
or like
Yeah,
Experian
and we're going to talk about factoring, and we're going to talk about financing your own receivables, and we're going to talk about that. But just to cut to the chase, I mean, your receivables are ranked A through C, and sometimes D. AAA, really. IBM, Ford Motor Company, well, not, the auto industry is a bad example now. IBM, Google, and a few others are AAA. If you have credits on AAA, even if they're not contractual, but you're doing month-to-month business with those, you'll probably get 70, 75, maybe even 80% discount, and you can factor your receivables. Okay, if you're dealing with Bauer Lumber, they're a D or F paper, you might get 5 or 10% factoring, where they'll give you 5 or 10% on a monthly basis. And factoring is an intelligent way to finance your business for growth, it's easier when you got quality customers. You got quality customers, because then the banks look at IBM, they know they don't default. They look, the U.S. government, they know they don't default. The government may pay late, but they don't default. Even with all the debacle from 2008, 9, and 10, they didn't default. They paid late. Now, it's another question for municipalities, because the next big problem, they say, is going to be municipal bonds are going to start defaulting. I don't know if that's true or not. I don't keep up with it because I'm not part of that game anymore. But I assure you, if the state of New York defaults on their municipal bonds, the shit's going to hit the fan. If some of the big municipalities start defaulting on the tax-free bonds, I mean, it's going to be, it'll be really rough.
I have a bit more technical question then.
Okay.
It involves Bauer Lumber. If hypothetically, what type of trade lines, if we were to do this as Bauer Lumber, what type of trade lines could I reference? Could I say that, let's say that?
Well, I mean, he does, you do business with some big lumber companies, don't you? Yeah. Some big lumber companies. So you'd be doing it with the biggest lumber companies that they have, and which are some of the biggest ones in their part of the world.
But I gain respect, for instance, let's say that I trade in lumber, and we have like a cash account for trading futures or something.
You mean for hedging, yeah,
Like,
yeah.
Could we say, hey?
Yeah, but you gotta show your track record for hedging.
I see.
And my experience, most small companies don't hedge because they're not very good at it.
Yeah.
So, but I mean, if you're a bigger company, I mean, just like you hedge your commodity prices, just like cattle guys that raise cattle, they have a trade between corn, wheat, barley, and beef, pork, and they have in combination of those deals, and yeah, that's all very, very sophisticated, and it's done. But at Marcus and his brother and Mark's, then that's not something they can do.
Yeah.
That's not something they can.
But the bank would respect that.
Oh yeah. Well, that shows your level of sophistication.
Right.
But just remember, when you're starting to sound smart, you better be fucking smart. Because if I'm the bankers, I'll say, oh, the kids, okay. Then you don't know, he may be a commodity trader. He may have come from commodity trading to now lending, and he can ask some hard questions. And if you don't have the hard answers, then you look like an idiot. That's why I always study the resumes of the people I'm going to see. I Google them, and even the bankers have Facebooks, and slap stupid shit on there, Not as stupid as the donkey, but stupid shit. And so, and I just, I used to get research, and this is before Google, and I did research, and I know that, in Chicago banks, we took over a deal from LaSalle Bank, Sally and I, years ago, and I knew that everybody this is when Chicago won the World Series a number of years ago, and so you could walk in the guy's office, and they had Chicago Cubs shit all over the goddamn walls, And so, not that I'm a big baseball fan, but I told a story about my son batting 640 as a little league kid, and then the coach came to me as a parent to tell me that your son's making all the other kids look bad. He can't back 640 anymore. And the kids, and he succumbed to the pressure. All the kids, I don't want to be, your kid does this, and he was the only guy that could throw you out, stealing second base, as he was a catcher. And he used to step into anybody try to slide to home, I taught him, like in football, you step into him and make sure he doesn't touch home. As long as you keep onto the ball, Derek, that's all that's important. You grab that fucking ball like it's your life, and you make sure he doesn't cross the plate. It's very simple. They're always going to be out. And so, but because his expectations were high, he thought he should bat 1,000. So if your expectations are high in your financial presentation, you'll do much, much better. I was surprised when people turned me down. And if these guys turned me down, then I'd say, I'd like to talk. You have a fiduciary responsibility to the shareholders of the bank. I want to talk to the board, or I want to talk to the next level of management, or credit, next level credit. And when you start asking questions, well, what's your lending limit, et cetera, which we're going to get into in some detail, you do well.
Dan, if you're not going to acquire, let's say, an existing profitable SEO company in this scenario here, and you were just going to the bank for money.
For your own SEO.
Right, to open up a new company, put the lights on, put people in behind computers and that sort of thing. If you're in business, what they would want you to do is leverage.
Yeah, they're gonna look for cross collateralization.
Exactly.
Correct.
For that to happen.
Yeah, and they're gonna want a cross collateralization against your existing company that's been around for a long, long time, and they're gonna want a personal guarantee. And I'm against personal guarantees. A person that guarantees is a fool with a pen. Okay, but in the beginning, many of you will have to personally guarantee because you've got no alternative, or to put cash in the bank, put a certificate deposit in. And especially when it's in a business, Doris, that you're not familiar with.
Won't this be harder to obtain a credit loan like this?
Well, it will, but I can guarantee they're not going to just when he starts the business, they're not going to do it just on the basis of the business. They're going to do it on the fact that she's been in the community 35 years. She's very successful. 40 years?
No.
Okay. 100.
26.
82 years. She's been in the bank 82 years. And so they'll base it on that.
Dan, when I told you I raised about $250,000 in a 2-hour period, using, coming to the castles and the experience that I've had, and, everybody knows who I am and so forth. And I had people, committing to, I had one guy I said the minimum was 100,000. One guy could only come up with 50. By the end of the 2 hours, I had $250,000 commitment just on a conversation there, and everybody was like, I just want you to go make money for us, But then I said, it's so hard to have to, I'd rather just put the money out and just go do the business than to have to.
Well, like I told you before, many years ago, you can grow the business faster using other people's money. It's very simple. You can always use other people's money, OPM, and low interest rates. Right now, you're never going to see interest rates this low. I don't know how long I don't know how long Bernanke is going to allow it to happen. But 15 years from now, you will kick yourself in the ass for not borrowing money at these rates. If you can borrow money, a lot of banks won't loan you money. Okay? But you'll kick yourself in the ass, because when we talk about the finance, low interest rates makes dreams come true. I mean, I borrowed money at 20%. Let alone 2 or 3%. Jesus Christ, I don't understand. 20%, and I made money. So at 2 or 3%, you got to be a fucking monkey can make money. Well, maybe some of you fall into that category. I'm not sure. We'll find out when we get into the financial part. But you don't have to be financially numerate. Again, you don't have to be. It helps. Yeah.
One question about the personal guarantee. The personal guarantee can actually change, right? You can guarantee.
Yeah. But once they get you on the paper, they don't like to let you loose.
Okay.
Okay.
So like they guarantee I'll take 51% of the company or something.
Yeah, they can. All that's possible. Okay, for the first go around, it was a success. Let's give everybody hands. Okay. Megan.